Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 done after the New York session for 2nd of October ended. I'm recording this video 6:30 in the evening New York time. At the daily chart level, the wave count remains the same. I still expect we're in the very early stages of a third wave. We're within the first wave of this third wave of a third wave. When the first and second wave are done, we'll be in the middle of a third wave, and at that stage we should see quite a strong increase in upwards momentum for a wee while from the S&P. For now, at the daily chart level, if Minuet Wave 2 were to continue further as a double combination or a double zigzag, it can't move beyond the start of 1 below 1627.47, although if it did continue further, I would expect it to find strong support at the lower edge of this channel. It's unlikely that it is continuing further because at this point here it's nicely in proportion to the first wave. And it's a nice completed zigzag structure. Single zigzags are more common than doubles or combinations. The targets remain the same, and I'm still expecting that first target may actually be too low. At 1739, minor 5 would reach 0.618, the length of minor 3. And at 1740, intermediate wave C would reach equality in length with intermediate wave A. If when we get up to the first target the structure for this fifth wave is incomplete, we'll use the second target, or if price just keeps rising through the first target, we'll use the second target where minor 5 would reach equality in length with minor wave 3. Let's have a look at what happened in Wednesday's session on the hourly chart, where the end of Minuet Wave 2 down here is this point down here. We did not get the final little fifth wave up to that short-term target at 1701 that I had expected before we saw the downwards movement. It just moved strongly lower. So from this low to this high now, we have a really clear three-wave structure completed. There are two possible structures for a first wave, either an impulse or a leading diagonal. And a leading diagonal allows the first, third and fifth waves within it to be zigzags. So at this stage, if we are in sub-Minuet Wave 1 trending upwards, we have had a trend change down here, then the only possible structure is a leading diagonal, with a zigzag for 1, a zigzag for 2, which is within the common depth for second waves of diagonals of between 0.66 and 0.81, it's 0.75, the length of the first wave. The third wave of a leading diagonal is most commonly a zigzag, but not that much less common. It could certainly also be an impulse. If one of the actionary waves of a leading diagonal is going to be an impulse, it's usually the third wave. I'll label it as a zigzag because that's got a slightly better probability. So we may have A, B, and we need C to complete. So we either need a 3 or a 5 up to complete tomorrow, and when that's done, we need a fourth wave correction, which for a diagonal must overlap back into first wave price territory, but can't move beyond the end of the second wave below 1680.34. Following leading diagonals in first wave positions, we usually expect to see very deep second wave corrections. So if this structure unfolds as I expect it should as a leading diagonal, we'll know when it's over to look out for a really deep correction. At this stage, the target remains the same at 1777. Minute wave 3 in its entirety would reach equality in length with minute wave 1, and the midterm target here only fits with this higher second target on the daily chart. So we didn't get that final upwards wave to 1701 that I'd expected before downwards movement. We just got downwards movement yesterday. That's done now, and tomorrow we should see a continuation of upwards movement for a third wave of a diagonal, and then again a deep zigzag correction for a fourth wave, which has to go back into that first wave price territory. Overall, for the next 3 days or so, I'll expect choppy, overlapping, generally trending upwards movement from the S&P before the structure is finished. That's all for me today with your S&P analysis, and I hope everybody had a fabulous day.